Welcome to Trading Lounge and the Gold Silver Report for the 28th of May, and I'll start with silver today. And what we were looking for before was that from the top here on this 1 hour chart, we were looking down for wave 4 here, and we had this as an A and a B wave and a C wave over here. But then yesterday we noted that we only had 3 waves up here with a pullback testing these lows here. So that means that this correction is going to get a little bit larger. So that means we need to look at it like this. So first of all, even though that the market can come down from here, the whole gold silver market is still very bullish and still has further to go to the upside. As I mentioned, with gold around the 1900 and the same with the 28 here, well, not so much with the 28, but the 1900 for gold was a 50-60% retracement level. So we're going to see the market basically, well, we'll see the 1900 become a magnet and the market fluctuating above and below that and holding it there for, for quite some time. So that's going to reflect back into the silver market, and the silver market's got its own price point here that it's working with, which is the $28 mark, and 8 is important. It comes after, well, going from $20 to $30, we would have 21, 22, 23, 1, 2, 3, and 5, and then 8. And we call 8 a profit-taking number. And we're certainly seeing that across this particular level here. So it's highly likely that we can come down to the wave 4 here of 1 lesser degree, unless this little 5-wave structure here is already completed and we could put wave C there, but we'd have to take that top out to do that. Otherwise, we're going to have a little 5-wave structure moving lower in wave 4. Now, it could also move lower as well, because we've also got this other count here on the 4-hour chart, which from the low, counting up as 1 and 2 and 3 and 4 here, then 1, 2, 3, 4, 5 here, 4, 5 of 1, and then an A and a B and a C coming back for wave 2. So it could drop lower as well in this instance. So we'll need to be mindful about that. We're going to see stocks, indices push up, so we may see gold and silver work edge lower as money flows into different markets. So both counts are valid here. I mean, if you're an ETF trader, then you will be, if you're in gold or GDL, then you want to be still continue to hold long, because even so, if this, even if this does pull down here, the comfort that you have is that we do have 5 waves up here. So because we've got 5 waves here, that means after correction, we're going to get another 5. So it's something that you can hold through, as long as you're not leveraged up. Let's check out the gold market. So my count has been, we've had wave 3 here with an A and a B and a C here, and I've always been concerned about this wave 4 here being too small. So we're going to address that today as well. But wave 1 and 2 here and 3 here, and an ABC for wave 4 here for this. So it's in 3 waves so far, but to confirm those 3 waves, it needs to take out this top here. If it doesn't take that top out and then moves down through here, then all of this pattern here, as you'll see on our website, has been labeled a wave 4, but it actually finishes here on this low, leaving 5 waves to the upside there. So in that case, we would have to look at wave 5 being completed there. So that chart's on our website. Now, also, we'll go back to the outside here just for on the 1 day here. And as I've mentioned before, that this area that we're in here at the 1900 is the 50-60% retracement level. So we have to expect this market to travel sideways. So don't get frustrated with all of this. It's not like we're trading ones and twos in here. We're in 3s and 4s of some degree of structure here. I'm concerned about wave 4 because I don't really see a correction in in here that justifies a wave 4. I mean, I've had the wave 4 in here because I've counted it conservatively like that. So now we're going to change that a bit. So wave 3 top can be in play here, or there can be one more little move up here for that wave 3 to be in top there. So that's what we're looking for, and then we'll be into this wave 4 coming into play through here, which is good because it will take this wave 5 up into that space here, and then we'll have wave 4 over here, so that we can get rid of this here. You know, we've come out of the trend channel through here as well, so that's a very positive event as well. But the main point here that and you need to sort of take home with you is that whichever way you look at this here, I always count conservatively when I start. I don't like to put, it's okay for me to put a target, because if I look at the classic trading levels pattern for all of this, then like this here would have the arrival, which we've got, and then we've got this correction here. So we're in this trend here. We'll look for 5 waves in here, and this normally tops out within group 1. So if that's 2,000 across here, then we'll look at 2,000, 100, 200 and 300. So that's where this top can come in 2,000, 100, 200 and 300. That's where that top would come into play, and then we'll fold down again. So I'm not one of these people that, even though I project a target quite high up here into this particular space up through here, it's not like it's, you know, $15,000 target or something stupid like that, you know. Sure, one day it will be there, you know, but it's not going to happen you know, for you. It's not going to happen for your next birthday, put it that way. So yeah, so I've had the conservative count, and now we're going to sort of play that out a little bit, because this wave 1 and 2 here and 1 and 2 here, that's fine. And we could also use this wave as this wave 1 here and 2. I don't particularly like that. I'm just going to dull that out a little bit, but it may be something that we need to bring into the fold a little bit later on. And there's justification for that, because GDL and GDX, you know, haven't come back as low as this. They're up here. So it would be logical to use that as a wave 1 and 2 in there. But we can come to that later, and that will become apparent later on in the structure as we move further up. So my main takeaway here is that we haven't had this wave 4 here yet. That's my thing. I don't visually see it here for that. So it means that we need to look at it differently. I'll go to the 4-hour chart here. This is how I have been looking at it, and I've squashed the wave 4 up in there, but it's just never been right, you know. And I've counted it conservatively as well. So like, I mean, I don't extend way out into the future or anything like that too much. I mean, I can do, but just sort of stay in reality for a while. So the other way to count this here, to get away from using blue wave 4 in here, would be this here, extending the structure out somewhat. So still having wave 4 here, wave 1 and 2 here the same, 1 and 2 here the same, but then looking at this is 1 and 2 here, and then 1 and 2 and 3 and 4, and going up into wave 5 here. So where wave 5 ends, this is the thing. If we've got wave 4 here where I've had it here, then we'll need another little move up here. If that's not the case and we come down from this point, we don't get above the 19 and we come down from here, then this wave 4's got to go over here for that. And then this wave 3 here will need to come over here for that. So it's just a matter of shifting things across a little bit, and then we would need to look at this here as all of a triangle pattern coming into this space here for that, and then leaving wave 5 there. Either case, so if we took this move here from green wave 2 low and brought it up to this green wave here, then a 38.2% is, well, it's a little bit lower at that point, but we'll need to adjust that a little bit. We can adjust that now. That's where it can come back to at this point. If it makes a new high up here, then this green wave 4 will be a little bit higher up at that point. And it's not that it has to come back to the 38.2, it's just a starting point. but that's what we'd be looking for at that point. And then wave 5, and then we go into our blue wave 4 here. So a little bit of a change, but not a lot. And as I've mentioned before, we need to look at group 1 above, which is 30, and then the 65 down here, 65 down a bit further. Close enough. So that's really the swing range for this, for what we're in here, in this whole correction. I mean, across the 1900 here. I mean, that will be 65, 72 and 80 in here, and then group 1 is 10, 20 and 30, but just putting the outside in here. That's what you need to hold for. And I'm going to tell you once again, it's going to take a while to get through all of this. So you're kind of used to nothing happening in gold, but this time, sitting in this situation, you'll feel better about yourself rather than the market being, in the bear market coming down over here somewhere. So it's positive, so you can remain emotionally positive, but there's still further upside to come in this. It's not a problem. It's just, it just got a little bit busy in this space here. So anyway, a slight adjustment. We'll continue working both counts and so on. But as I mentioned in the takeaway situation, this is going to be, all of this area in here is going to be a bit of a tough slog in here, and we'll get some of it right and we'll get some of it wrong, and you'll get some of it right and you'll get some of it wrong. But it's just to stay positive and knowing that we're going into a storm here. I mean, that's good to know, so we can prepare ourselves financially and emotionally for that. Alrighty, I'll leave it at that. There's nothing really to add here except just to stay long. It's going to be, if you're if you're day trading this, then that's another cup of tea altogether. Because I mean, if you're scalping, then it doesn't really matter. Nothing really matters that much. You'll be out before the end of the day and so on, and you may have 4 or 5 trades in the day. But if you're position holding, if you're holding CFDs, then you've got yourself a little bit of a problem at this point. Because CFDs, you'll be paying the overnight financing, and it's not like these CFD providers want to know how much they're clipping your ticket. It's not like they add it all up and tell you at the end of the week how much they're charging. They'll just take it from your account, each day. So you don't want to be caught up here for, a whole month paying overnight financing fees on those bucket shops. Alrighty, thanks for tuning in. Cheers.